Hello, this is Julie. It is Wednesday, November 27th. Did I say November? I'm sorry. Not quite there yet. September 27th. Um, take a quick look at the markets today. There was some great volatility that came back into the markets. And I hope your trading day was good. Let's take a look at some of these charts. The equities rallied up on the Trump tax plan. We had a sell off yesterday, and then the market sort of turned around, uh, coming back into this downward sloping moving average, broke above it on the 60-minute. But I think this is going to be short lived as people start getting into the weeds on this tax plan. It doesn't look like it's as much help for the individual as they initially led us to believe. It looks like a pretty decent plan for the companies, but the individuals, I think they have a lot more work to do on it. So that's why I would not get married to these tops here. The NASDAQ nonetheless did have a great rally into that release about the tax plan. And then as soon as the president started talking, the market started pulling back. So that's typical market, action. Buy into the news, and as soon as the announcement comes out, start selling it. And we did not quite get prior week VWAP, but very nice price action today. Um, you can definitely see that the um, levels were expanding both on your 15-minute. I usually put it on a 15. And that's when you want to get, interested in the market if you're watching it and start taking these reversals long at that point to get, long in a market. Conversely, the E-mini looked just the same, but I think the NASDAQ provided the better bang for your buck on that. The Ultra Bond came off. It was a fabulous, fabulous ride. It just lasted the entire day. Um, Here was September 27th, and it just never turned around. Um, just a little bit off of its low, but fantastic move. The Treasuries, after Janet Yellen spoke yesterday, um, the market realized that the interest rates were going to be um, there's like 100% in now for the November or December hike, and I think that's what the market was pricing in. There will be a possibility that we'll have some Fed members changed out next year. Um, but for right now, the interest rate hikes are on the table despite the lack of interest rate, I mean, inflation. So we got a little bit of inflation today on durable goods. We've got GDP tomorrow. So keep your eye on the calendar. Um, let's take a look at it. Pull up the economic calendar on the website and go to tomorrow. And got some Euro GDP overnight. And then we have our second quarter GDP. They're forecasting 3%. So that's what the latest release was 3. So the last release was 3. We want to see that continue. Um, and so that should provide us some great volatility continuing in the markets tomorrow, up or down. And then, of course, we've got jobless claims and PCE is what the Fed looks at also, this PCE index, measuring the change in price of goods and services, which can measure a good, key leading indicator for future inflation. Then we've got more FOMC members speaking. It was really a big FOMC week for um, speeches. Natural gas storage tomorrow, and then Friday we have PCE coming out. So that's our and personal spending. So that'll cap us on that inflation and more consumer sentiments numbers and PMI. So some good trading Thursday and Friday, um, and we'll see how far the markets retrace overnight. All of this extreme move, um, and gold likewise just really sold off. Um, had some great opportunities for trading gold today. It ended up on its low. Had some fabulous moves. So anytime you got a market that is directionally like trading short, you want to be entering at these key locations whenever you can, and if not, wait for the market to get up to these upper band reversals. And oops, that was the wrong. There we go. Just start hitting these top band reversals whenever you can if you're day trading. Oh, did that twice in a row. It's been a long day. So I've been at the monitor all day long this week. Um, and it's kind of getting late, so I'm going to let you go and get ready for this events tomorrow for our GDP. So we'll have more opportunities to trade gold, the indexes, and the bonds tomorrow. There's going to be plenty of time left for these moves. If you want to get a good overview of what your markets look like, come over to FinVez, hit your futures, go to your market that you're looking at. So, say the bonds, they don't have the ultra bond on here, but you can use the 30-year, put it on a monthly chart to give yourself a little bit of perspective of where you are. And you can see this trend line going up, 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 up. And that's what we're fixing to break if we move this down. So, it has a long way to run to the downside, is what I'm trying to say. It's going to provide good moves up and down for us. Likewise, for your indices, we're at all-time highs. And the Fed is starting to normalize, albeit very, very, very slowly. I don't think there's going to be any chance of a huge sell-off, but I do think that there will be a correction coming up in the S&P 500, but the money flow is still with the financial institutions who are holding these markets up. So just, waiting to see what Washington can get accomplished on, these regulations, cut the regulations, allow the money flow, allow the growth, get into that infrastructure spending put some money back into the economy, and we'll see what happens. The stock market, the S&P 500 probably will come down, but it's way overvalued. So you have plenty of room for this thing to actually get back to a normal, realistic level and not such this overvaluation. So, in my mind, it's going to be a fabulous, fabulous ride. Um, and we'll see how the dollar keeps going. Speaking of which, we look at the dollar. What a strong move that was today over the last couple of days. So we'll see this dollar continuing up to 94 and see what happens once it gets there. All right, this is Julie, J Auto Trading Strategies. Keep it real and get ready for Thursday.